Hello, everyone. Welcome to Smart Investing. I'm Albert, and today this video is going to be on the banking services sector. This is video number 53 of the banking services sector. So, before we begin, I'm just going to mention that I'm only going to be doing 5 stocks, and we're going to be going in the order from the bottom all the way to the top, like we always do. Other information that I would include will be some fundamentals, some quant ratings, and some technicals. So if you guys are interested in these stocks, I will go over them to see if they're good companies or not. Again, me personally, I don't like any banks at the moment. I do like financials, but the banking sector for me is not part of what I like in the financials. There's another sector that I like. So we're just going to go over the 5 stocks, and we're going to do that right now. So the first one up that I have is UVSP. So obviously the stock market is open right now. As you can see, it is 2:16 p.m. in the upper right hand corner. My battery's at 45%, so I definitely have time to do this video, and I'll see if I can make a video right after this. So we're gonna look at, I can't use these numbers for a short-term pattern, meaning the 1 day and the 5 day. I used a different technical pattern for a short term. This one varies, but this one can be used. But that's like the limit, up to 1 month or more. And then I could still use the 1 month or less for a short-term pattern. So anyhow, we're gonna jump into the first page, as I like to call it, if you see my videos. So we're gonna put this here. Company is called Univest Financial Corp. So as of right now, markets are active. This company is $695 million company, 52-week high and low of $23 and high of 32. That is not even a difference of $10. So we have very low volume as well. Earnings are pretty nice, so it looks like they can cover the dividend. PE ratio is not too high, not too low. Fairly undervalued. I say slightly undervalued. So you're getting a small discount, which is not too bad. So free float of shares is 28.72 million shares out of the 29. So the difference of that would be the shares that are already bought or people that are holding on to it. So if we move on and see the range, that would be only for, I don't know what time frame that is, but that's still not a huge range. Not even a 1.5%. It's pretty small. And then also, so we have market cap, could be better. The 52-week high, 52-week low could be better. And then the volume could be much better than that. So we're going to look at the chart now. We're going to look at the 5-year. So as we can see here, it looks pretty flat. So if you bought in at 2017, and then if you look here, it's pretty flat. Then it went down. You kind of went up. It only went, so if you bought before 2020, you're looking at, even after 2020, you're only looking at maybe a $10 range. So, I mean, most of that was pretty flat. So the only way you could have gone up on this was, again, in 2020. So many stocks were on sale for 2020. And especially now, we're slowly going down. So I think this bear market is better than the 2020 because the 2020 was like all of a sudden. And this one, you actually had time to think about and, analyze and do everything to see what was available. So this time around, it's a better pace and flow to it as to getting in and jumping in. As of 2020, you only had like 3 months and that was it. Stock markets went through the roof. But then again, now they're in a downturn. So if you came in late in the game, basically within those 4 months in 2020, that was it. You bought really, really high, and now you're down for the count. So if you can't stomach that pain, then you just pretty much have to rethink the strategy. So we have here a 1 year. As you can see, it's a downtrend. Overall, I'm not too crazy about this stock, but we'll continue more work and dig deep and see what is going on with this stock. No votes for any stock sentiment. It's on 0, so half and half, and it's pretty much even. Not much to look at there. Analysis, I don't really look at this top page here. So so far the technicals have failed. Now we're gonna look at the quants and continue the fundamentals. So the highest rating for the quants would be the value, which is rated at 7.10. We're gonna see if we agree with that. And then the lowest was at growth for 3.83. We're gonna see if we agree with that as well. And that's pretty much it. So for the value, we're gonna look at the financials, and then we're gonna jump into the indicators and everything else in it. Just real quick analysis. So we're gonna look at the yearly results. So it looks like they're doing okay for return on assets. They're doing okay on return on equity. The reason I say that is because it's increasing. 2020 was a bad year, and then 2021 was a good year. So this one here, not that I wouldn't expect it, but I wouldn't be surprised if numbers or estimates went that low again, because 2022 is, obviously a bad year. So I wouldn't be surprised if estimates and, analysts, ratings and all that, and Wall Street started doing a bunch of downgrades. So again, we're going to continue. Earnings per share. So it looks like they increased for 2021. I don't have anything for 2022, but I'm sure I could guesstimate between here and this line. So that'll be the top of 2021 and the low of 2020. So we have that range to fill in, anywhere between that. So we're going to look at the net margins. It's not giving me that. Pretty high debt, like always, 89%. Looks about the same. It doesn't look like they are paying off debt. Minor increases, barely even, 2%. Losses and gains, you see there. So 2020, that's the number that I want to look at, because that was the last downtrend market. Pretty drastic. And again, that would have been a time to actually been paying off debt, but guess what? Did not take advantage of that. I think any company that took advantage of paying down debt and raising capital in 2021, that would have been a smart move. But to each their own for each company. That's how it's done here in the stock market. So I'm not an expert on these indicators for book value and the price to share, or there was one more here. So price to book, price to share, and book value. I'm still learning the ins and outs of that. So I just want to just do what I know, and I just stick to the PE. I know that some indicators work well with certain companies because of their routine of how they report. It's always the same reporting method, and some businesses have their own way of doing things as well. So they might not have a lot of equipment, or people might run software and they might find better ways or something. There's people always looking for better ways to do things. So that's just behind the scenes of what companies might do. But I just don't know. I just look at the numbers behind it. So that's what we're doing now. So for the net income, it looks like they have gained net income for the last 5 years. Looks pretty. It went up in 2019, then it went flat in 2020. Went up a lot in 2021. So that was a difference of about 100%. So revenue, I'm sure it went up. Operating income's not giving me that. I'm sure it went up. So we can see here assets that are for 2021 are at about 7 billion, and then debt is about 6.35 billion. And then we have cash flow, which is very, very important for any company. So we have 694, close to 7. So they do have cash on hand, this company. Again, and these are 2021 results. And then now we're going to look at the first page again. So then we're going to see the dividends and stuff. So they do have a lot of cash flow. They can afford increases. I don't know their business model, but they seem to be holding up just fine. So split ratio 3-for-2, split 5-for-4. Maybe that is the way they are gaining capital. They haven't done that since 2005, so I don't see that doing that anytime soon to raise cash. So I'm not gonna go over any forms or anything. Just something very, very basic. So again, they have raises in 2022, but they've been doing flat payments for at least the last 5 years. So again, for a growth stock, can't even use this. For a dividend stock, it's not that good. For value, can't even use it. Really, I still think the market cap is too low. Cash flow is good. There's just better companies. The company's not bad, and it's not like good. I'm neutral about it. I'm in the middle. I think it just needs a little work. People need to be more interested in it. Investors need to be more involved, especially the richer investors. So I'm going to say no to this stock, and we're going to move on to the next one. Next one is BMRC, Bank Marin Bancorp. I'm going to look at the first page on this one. $487 million market cap. High of 40. I'll round it off. Low of 30. Difference is okay, about $10. I can roll with that. But that market cap needs to go up, especially for a bank during these times. So we have here PE ratio of 13, dividend of $1, not too bad. Earnings per share 2.3. So we have here decent numbers. Volume is at 23,000, should be better. So you can see here, 1 year down, 5 year looked pretty flat in 2018, went up in 2019, and it was still pretty flat. Difference of $1 from that whole year. So this stock on 2020 went up for like a few dollars, maybe $7, $8, went down, went up again in 2022, but stood flat in starting about May, stood flat. Similar price to the 2020 prices from, about April all the way to September of 2020. So those prices remain flat. 5 year outlook, the past 5 years, so it just looks flat. Does it have any short-term uptrend? Let's see. I don't see anything. Everything looks pretty down and flat. So far, technicals don't support it. I don't see any growth as of now, long-term or short-term. Everything's in limbo right now. We're going to move on to the next indicator and the next analysis. So, technicals failed. Fundamentals, we're going to continue. The quants wow, everything is like rated 5. So the highest rating was a growth. I don't see that happening. 5.98 growth. I say slightly lower than that. I give it like a 5, but they rated it a 5.98. Um, Again, people might ask, how would I know that? How would I know this company's growing or not? Simple, just by looking at the 52-week high and low and then the market cap. Again, people have to remember these are public markets. People buy, people sell, people hold on to their investments. Um, there's different sentiments. People have their interests, their likes and dislikes. It comes and goes. That's what happens in the markets. So again, people do want to make money, and some people are in it for the long term. People have their own ideas, and you just have to respect what the market is giving you. Uh, nobody can control the market. You can only, absorb of what is given to you. Like I said. So again, I don't agree with the numbers are pretty accurate, but I just think they're slightly lower than this. The income, I'm not crazy about it. I only look at the top quant rating, because usually that's most important. If it's close to if there's another rating close to that number, I might look at that too. So we'll look at the income as well. And then the value, I guess we could look at that as well. So we'll look at that. So now we'll just jump into the company financials. Earnings have been going up. That's a really good sign. Return on equity, we're going to do the annual setup like I always do. If it's not loading properly, then I apologize. And we'll move on to the next one. So, okay, we'll just keep moving on. Net income looks pretty flat. I'm not too crazy about it. Like I said, for value, hopefully it's flat. It's not a good thing. It's not a bad thing. It just needs some, a little push. It needs a little investor sentiment for bullishness. Now's not the time. This year's not the time. I don't think next year's going to be the time. Maybe a few months from now, one day, hopefully, a few months, it'll have an uptick in and out of the market, and just call it a day. I don't see the stock going up anytime soon. Apologize, I don't have any estimates for revenue or operating income, so that's out of the question. So that's going to take away from my analysis and accuracy. Balance sheet looks okay compared to other banking stocks. Looks pretty much the same as any banking, high in debt, leveraging their loans and all that. So we have operating cash flow, investing, and financing. For growth, I don't really see this growing again unless they put their capital to work. Their value and income, I'll say this. For them to pay a dividend of $1, I've rarely, well, I wouldn't say rare, but it's hard for banking companies to pay that much. They're usually pretty cheap. That's why I don't like the banks. For a bank to pay $1, that's pretty decent, especially with those kind of earnings. So they do have cash on hand, and we're going to look at the dividends per share. So they're paying rising dividends. Are they paying that yearly? So the last cut was actually in 2019, as you can see here. Then they started to raise it in 2019, and they continued that raise. So it still hasn't hit 35, and it's got a long way to go. Again, it is still paying rising dividends. So as you can see here, they're doing splits. It just takes away from your percentage. I mean, no, it's rare that people invest millions into one company, but if they do, then they get a higher percentage of owning the stakes and the lion's share for that company. But again, with all these splits, it just lowers the percentage of ownership of you as an owner in the company. So definitely, I don't like that. I think that's what took away a few points off the quant rating. So for the income, I think it's a little bit lower for that rating. And then for the value, it still needs to do some work. So moving on to the next stock, we have here FBMS, First Bank Shares. So 720 million market cap. PE is slightly undervalued, so get a small discount on that. As we can see, earnings per share is at 3. Dividend is at 0.76. So market cap still needs some work. Shares and outstanding shares difference is about 1 million. So needs more interest from better investors that do have the money. Sorry, I was just looking at the chart real quick. So up and down we have here, up, then down and up. Stood flat. So far, I don't like the stock. So far, it's failing in technicals and got this bug in here. Technicals and fundamentals look like it's failing. I don't know why that's a little bit too high for the income rating. Growth, I don't see that happening. Definitely not this year. So looking at the estimates and the indicators, I have quarterly. So there we go. ROA, ROE, EPS, debt, obviously close to the 90s. We want to see the cash flow. Cash flow definitely increased in 2021. Let's see if they actually spend it. So that was in 2021. We're going to see what happened for the cash flow in 2021. So their balance sheet is growing, and their net income, I'm sure their revenue is growing, and their cash flow as well. We're gonna see their cash flow. So 207, negative 95. So that's a difference of at least 400. So they definitely have cash in the bank. They're pretty cheap on the dividends. That's not gonna help out with a 1 penny raise. There's better stocks than this. Do they have any splits? Had one in 2006. I mean, they're doing something. They're giving raises, but it's just not well enough to actually think about it as a really good stock. So again, I think they need work. Hopefully they can still continue to do the right thing, even though they might be flat in one or two areas, but they're cash strapped. So as of right now, I'm going to say no to this company as well. So I have 3 no's and no yeses, and we have 2 left. So I'm going to move on to the next one. Again, the last 3, they just need a little work. They got to grow there. They just have to continue what they're doing, because it takes years to grow, especially to a $1 billion company. And then once, it's harder to, back then, if you were in the millions, I'm talking 10, 20 years ago, it was okay and that would slide by. But during the 2010s and 2020s, now it's like you have to be at least, a $2 billion company just to be recognized. So in all reality, they're just not recognized, not even as a small market yet. So hopefully when they get there, they'll get there. AXP, American Express. This one is definitely a big fish. So right off the bat, I'm gonna say that they're pretty good. So market cap is insane. Volume is at 1.43 million. The average volume is around 3. That's still high enough anyway. 1.43, that's insane. That's pretty high anyway. I think anything over 500K, depending on the sector, and depending on the movement on the chart and daily activity. Sometimes it can be some movement, sometimes no. So 52-week high and low, definitely a big difference. So you're looking at about close to a difference of $65. Uh, the average is about $10. I can't really say if it goes for some sector. So far, I've seen a difference of an average of about $10 for the banking sector. So this definitely exceeds that. So a $65 difference. This is definitely a stock that can be for the long term. Short term, I don't think it's a wise decision. You might as well look at other stocks for a short term to be in and out. So PE ratio, American Express. So they have a 14, slightly undervalued. It could be slightly better. Forward PE looking is at 3.77. So we have a difference of 0.25. So we just gotta wait, I guess, a little bit more for it to go down. So I'd say around 13.5. Not a little bit greedy, not too greedy. So again, I can't give you a price as to what 13.5 is. You could also do the math as well, and then also see what those prices are. But yeah, I give it like a 13.5 for the PE. Then it'll be nice to jump in. Earnings are definitely strong, 9.75. Dividend of 2.0. Dividend yield, I know it's low, but it's worth it. I would expect for this kind of company with that much of a market cap to be handing out rising dividends. And this is the amount of shares. So massive, massive, massive amounts of money in cash. Definitely a company to not be fooled with. Investor sentiment is at 100% bearish. I'm going to look at the quant ratings for this. Says highest rating was for quality, not much value. And the second one was 6.4 for growth. So a lot of quality. Overall rating was 5.31. That's okay. But again, we're in a downtrending market, so we're gonna see what is up with this stock. We're gonna look at some technicals real quick. So for the 5-year, we have here almost, if it were me, right close to this line, close to a buy rating. Again, it is 2:43. Markets are still open 1 more hour. Markets have been going negative ever since the afternoon. In the morning, they were fighting mixed. They were fighting to go up or down, but it went up close to about 1% in all major indexes. Then it reversed like I thought it would. And then markets are going to end this quarter and end this month negative. Not only for the week, but overall. Next 3 months, I'm going to expect it to be mixed. October is usually a negative month, but since we're in a bear market, there's more accuracy and leaning sentiment towards negativity. So I'm going to say October will close the month negative. November might be tricky and December might be tricky just because of the Ukraine stuff. I know it's overseas, but what affects them there may affect us over here. Typically in the US, November and December months are bullish months, but who knows? Everything has been kind of mixed reactions, and then I think it's negative, but we'll see how the overall sentiment is with Main Street and Wall Street and everybody else who's involved in the market. So I have close here to a buy rating. I'll give it a little bit more leg room underneath this 5-year line. So EMA is at 200, so I'm looking at 134. So we're looking at a price at about, so I'm looking at about, what was the last time they went flat around there? So we're going to look at that. We're gonna move this over and we're gonna see here if it's under or between. So we're gonna say about a buy rating of about 126 would be a nice price range to get in. I know you will be breaking lows, so I'd say that would be my guesstimate to start buying, and then dollar cost averaging as it goes down. If you can handle losing money in the short term and gaining in the long run, again, there's no point of long-term investing then. If you're not looking at this at about at least a 10-year holding period to buy and then hold on to it. So let me look at the high rating again. So quality. So for quality, I'm going to expect a lot of estimates being beaten, a lot of net income. Cash flow, yes, but it wouldn't be the highest priority. I would like to see the net income and the debt lower, not them relying on debt so much. So we're going to see that. Hopefully we get to see that. If not, then oh well. So we have here ROA. So it's not giving me annual estimates. Net income, 8.06 billion in 2021. Total revenue, we're gonna see if it gives me that. So 42 billion in total revenue. It gave it to me in this one. Operating income, 10 billion. So these are like insane numbers. So if we do 8 billion into 42, 8, 16, 32, 40. So we're looking at about at least close to a 20% net income or net margin. So we have here 88% for asset to debt liability. So that, I don't think that's really good. Businesses, I think the only quality they have is that businesses do use American Express, but we're gonna see their raises. Dividend raises, they're okay. They're not pretty frequent. So we have here a raise from 43 cents to 52 cents. That's a 9 cents increase. In 2021, it was pretty flat. You can see it's been flat since 2019. So again, these raises are not that good. They do provide dividend raises, but it's not frequent. I think the only exposure that you have is that they're a $101 billion company. I mean, that's the only advantage. That's pretty much it. So, to be honest, I'm not too sure about this company. I mean, honestly, they're not paying that much. Earnings per share is at 9.75. If you're looking at this for a dividend payer or a dividend growth payer, or it's just if you need this for an income portfolio, definitely not. If you are considering this as a growth investment or momentum, maybe. For growth, I'm definitely gonna say no. And then I think it's only good for a few years, but to keep it forever in your portfolio, I'm gonna say no. The only reason I'm gonna say yes is because they're a recognized company. If they weren't recognized, I mean, to be honest, I would say no. A lot of people might hate me for this, but personally, I would have said no. But since they're a recognized company and they have that such a strong market cap, I'm gonna say yes, just to hold on to it for a few years and then let it go. So as of right now, it seems like a safe play, but for a few years, maybe 2, 3 years. It'll be nice to hold on to till the market goes up, cash in and out. But overall, I just don't like the company. I think the debt's too high. Market cap is really high, but I don't really see any numbers that pop out to say, oh wow, okay, it looks like they're doing something right. I just don't see it. So last company that we have is UBOH. This is a over-the-counter company. So we have here volume 295, 52-week high and low of about 15. So that breaks the barrier. There's not a lot of volume here. So obviously this is over the counter. Right away I'm going to say no. Volume's really, really low. Market cap is really, really low. They do meet the requirement, I would say, for market share if you want to get in and out. Dividend is not too bad, actually. Earnings per share is pretty good. Free float shares and shares outstanding. There needs to be more activity in this. So as we can see here, for the 5 year, it has dropped tremendously. Had momentum from 2020, went down, kept this momentum, and then ever since of about May of 2022, it just dropped like a rock, and you're stuck being flat of the 2020 highs, and that's what it looks like. That was pretty much it. So we have here the analysis for the technicals. I say it failed. So fundamentals is saying momentum and value with the highest ratings, 8.45 and 8.48 for momentum. So value and momentum. We're going to look at some numbers here to verify if that is actually true. It's not giving me any key indicators for this company for annual estimates. So we're going to look at the net income. Net income is about, for 2021, 13.5 million. They dropped. Total revenue is not giving me anything. So it looks like they're slightly lowering their debt, or at least trying to. So for their balance sheet, they went down, but then they went slightly back up in 2021. If they could lower their debt in 2022, that would be good, but I don't see that happening anytime soon. So cash flow, or the cash flow positive. I'm gonna take a look at that. So they're basically flat. So giving dividend raises. Excuse me. It looks like they are. So since 2020, they made a cut of the 7 cents, and then it looks like they're starting to pay again. And then in 2021, it looks like they were paying 7 cents, then 14, 16. So better raises than most banking companies that I've seen. So I mean, it could be better. I think the only quality and momentum is the price. That's the only reason I think it deserved a high rating. And it actually held up for a few months for this uptrend there. But as you can see, it's a really big downtrend. So that's about it. Thank you guys for watching this video. If you're watching this video, I know it's long, but I'd like to do my long videos like this to see, not only for you guys, but for myself as a log and history, to see which stocks are good and which are bad. I review my videos maybe like a year from now, and I'll look at them and see if they were good companies in the past, and see how they're doing, compare them in the future. So when that future comes, I'll see back then how it was and how it is in the future when I do the video in the present, if that makes any sense. So I'm gonna say no to this company. So again, I only had one company, so overall I said no. Oh, whoops, looks like I said no, 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 and no. The only reason I said yes to this one was because American Express is a recognized company. Again, if it wasn't a recognized company, I definitely would have said no. Um, when it goes in an uptrend, I'm definitely gonna review this company again. But overall, I don't think American Express is that good. So I'll give it some slack this time around. But AXP, I don't like. We'll see. We'll see. Um, we'll see this company in the future. See if if it's any good. But I don't think AXP is good at all. Um, Again, recognized name. That's all it is. So thank you guys for watching. Sorry for this video is being too long. I'll catch you guys in the next one, and stay tuned for my other videos. Thanks again. Have a safe weekend and take care.